I just paid off a 30-year mortgage in 3.4 years. Here's the exact strategy that most people miss. Most homeowners don't realize this, but your 30-year mortgage is designed to keep you in debt for as long as possible. Here's a secret that the banks don't want you to know. It's called a first lien HELOC. Instead of making extra payments or bi-weekly payments or whatever most people talk about online, we use this strategy to pay your home off in years instead of decades. The traditional way of paying off your home quicker benefits the bank because all you're doing is tying up your excess cash into the house, which you can't touch. Most of you don't have enough expendable cash to throw that extra amount that it actually warrants anything on your mortgage. Even though you're making an extra $100 or $200 a month in a payment, it only knocks off a few years. But the banks know that you're going to buy, sell, or refinance your home typically every 6 to 8 years. And all you're doing is restarting this 30-year clock all over again. This is what this scenario looked like for this client. We're refinancing this $436,000 loan. He's had it for about 46 months at a 4.125% interest rate. We treat our HELOC just like we would a checking account. So you're going to take all of your cash, your paychecks, anything that you receive, you dump it into the HELOC. Every dollar that hits the account reduces the balance dollar for dollar, which reduces the interest charge that you're paying. Interest gets calculated based on the average daily balance with this loan. So it's very key. The more money that you can flow through the account, the faster you pay off your house. In this guy's example, he's got about $30,000 a month that's hitting his account. After all the bills, the food, groceries, entertainment, everything gets covered for this client, they've got about $10,000 left over. So that assumes they've got on average $20,000 a month in expenses. Here's what our scenario looks like. Here's their current mortgage, again, a 4% interest rate. We're paying that off in 3.4 years, 41 months, saving them $220,000 in interest. The average rate on this loan is going to be 7.2%. It's a little better than the 8% I've been showing you guys. The Fed made their rate cut, so some of these HELOC rates are starting to come down. Here's the real kicker. The effective rate on this mortgage is going to be 0.8%. He's borrowing his money at less than 1% interest. If he stays in his current mortgage, he would have only paid down $33,000 worth of principal. He still would have owed $400,000 on his home. But in our strategy, we're going to be completely debt-free. And now we can use this line of credit to go buy more assets. Now, some of you don't want to go buy more real estate, but let's just say we continue to make this mortgage payment into an investment account. Let's say that I was getting 8% annually. So instead of paying the bank, you pay an investment account. This person can earn another $1.6 million just in that account versus making that mortgage payment to a mortgage company to keep that low interest rate. Stop letting the banks win. This is how you can take some power back, start building wealth, some cash flow, and truly change the game when it comes to your financial outlook. Comment HELOC if you want me to show you how this works for you.